What I have seen during the past few years is that these are the common terms that I've seen in the offer to purchase from your agencies. I've seen that sellers can ask between 35 to 70% down payment. And of course, if the down payment is low, the risk of default for the seller is higher. And on the opposite, if the down payment is high, the seller mitigates the risk of default, but he will, less potential buyers will be interested in buying the property. No, that of course, down payment is important because if it's low, more potential buyers. If it's high, less potential buyers. Now here's an interesting thing. When you're putting together a guarantee trust or a deal with owner's loan, you have 100% flexibility of sitting or communicating with the buyer's agent, seller's agent. Hey, let's put together the best deal. Both know what their clients need. You can see it and figure out what would be the best fit to make the deal go through. If you knock on a traditional lender's door, they're going to say to you, down payment 60%, we will carry 40%. This is going to be the interest rate. There's no room for negotiation. And I'm not saying that traditional lenders are better or worse. No, I'm just saying it's different. When you bring a client to a traditional lender, your involvement is almost zero or nothing. It's a direct relationship between the buyer and the borrower. You're not involved in there. But when you're talking about a guarantee trust, your involvement is it's key, no? 100% to make the transaction work. And you can play with these numbers, no? The amount of the down payment, the interest rate. Down payment, interest rates I've seen go between 5.5 and 8%. And as you all know, the 30-year fixed mortgage rate in the US, the national average, last time I checked, it was 6.88%. So you can use this mortgage rate as a good parameter. Of course, follow it and use it as a good parameter for your deals with your clients. And I when I was building this presentation, I thought that, and this is only my particular point of view, I don't know if it's true, I'm not an expert on the field, but it seems to me like when the interest rates are high in the US, it's more attractive for the buyer to look for sources of financing in Mexico. And when the interest rates are low in the States or in their home country, they would be more inclined to borrow money in their home countries and bring cash to pay for their vacation home. I don't know if that's the case, but it's a fact that owners financing hasn't been very much popular, as we saw. Less than around 5% of the inventory offers owners financing. But the point is, or maybe agents didn't know how to explain it to their clients. So the more you understand about it, maybe we will start seeing more and more owners financing in the market. Now, let's talk about the length of the amortized interest. The length can go between 15, 20, 25, 30 years. If the length of the amortized interest is longer, that means that the monthly payments will be smaller, but there will be a bigger balloon payment because it accumulates more interest. On the opposite, if the length of the amortized interest is short, the monthly payments for the buyer are going to be higher, but the balloon payment will not include as many interests, so it would be a smaller balloon payment. So even if the length of the amortized interest are long periods of time, the truth is that there will be required a balloon payment. No, these are short-term loans, 3 to 8 years. That's what normally sellers accept, and that's when the buyer must pay the entire loan, principal and interest, in 3 to 5 years. Well, the terms of the loan that I've seen more common is that the loan is paid in monthly installments that include principal and interest. There are no prepayment penalties, and there are daily penalties in case of default, around $50 to $100 in case the buyer does not pay on time. And all these terms of the loan are included in the same deed. Chapter 1, loan. Chapter 2, guarantee trust. And all of it is signed by buyer and seller before a notary public, and the document gets to be recorded in the city. The lien is recorded. And this is important because I've seen misconfusion that some agents think that you close the property with a typical fideicomiso and just put on a side a private mortgage or a private loan. That's not the correct way to structure an owner's loan. Everything must be clear and specific within the same deed, the deed of transfer. And as I said, the seller will be listed there as the first or the beneficiary in first place.